Hey everyone, me Kevin here. Could Bitcoin go to zero? And what are the actual components that hold Bitcoin together? That is, what makes Bitcoin move? In this video, I'm going to reveal to you the impacts of what certain things in the market have on the price of Bitcoin. And these are going to be rules of thumb that you can write down. I'm also going to show you how you can be aware, at least try to be aware, of potential dangers brewing at your brokerages. Folks, let's get into this video after reminding you that this video is sponsored by me. Get 50% off with the coupon codes, the link down below in the programs on building your wealth. We've got a massive lecture set coming out this week before I leave town on Friday to help reward all existing course members with brand new content totally for free. And it's content that you've been asking for. Here's a chart that studied a proxy investment or a group of three things to try to understand what makes Bitcoin tick. And this is made up of three things, which are quite interesting. We're going to write those down here so we know. First, it's made up of a 1-to-1 correlation to tech stocks. So if tech stocks go down 10%, we would expect Bitcoin to go down 10%. Number two, if gold goes down by 10%, we actually expect BTC to go up by 5%. So you've got a little bit of an inverse relationship to gold. Then the third aspect is if volatility on the NASDAQ goes up, or we'll say up 50%, then we expect a $4,000 movement in BTC. And then the fourth thing that affects Bitcoin and gives us an idea of would potentially BTC go bankrupt is the following chart. Is the chart that shows this theory that as global money supply goes up, much like in the stock market, you see this correlation as well. As global money supply goes up, you tend to see the Bitcoin market go up substantially. Take a look at this. As we print money over here, you get a Bitcoin boom. We print less money, you get a Bitcoin trough. We print more money over here during the COVID pandemic, you get a crypto boom again, right? February of 2021 over here, representing the peak of around 69,000. But only Bitcoin really marries to these correlations, and you have to take them all together. So it's not like we could just look at gold and see, oh, gold's down 10%, Bitcoin's up 5% on the day. The way to look at this is very simple. You want to kind of make a conclusion that's simple from this. If tech goes down and gold goes up, which is often a fear trade, though it doesn't always have to be, and volatility goes down, so we get sort of a bleed out of volatility, you're going to have a bad time in crypto. Crypto equals bad. And obviously we know a few of these are true. We know that the money supply of money being printed is going down. We know that tech stocks are going down. And we know that there's fear of potentially going into a recession, though gold isn't really behaving normally right now. It's actually going down. But that's offset by the fact that the other thing that's happening that's weird is volatility isn't really up. See, usually when we have crashes in the stock market, we tend to see the VIX spike. And we're at pretty dang low levels in the stock market right now. But take a look at this. We still haven't gotten those cathartic flushouts that occur when we have massive spikes on the VIX, like over here during the COVID pandemic, in March, at the end and beginning of 2018 during the taper tantrum, and of course the Great Recession over here. Volatility has slightly moved up back to a more sort of normal line here, a normal average, but it's by no means spiking. And that's actually bad for BTC. So a lot of the movement in BTC's price can be traced back to correlation to tech, volatility, and M2 money supply. If anything, in my opinion, yes, this does potentially signal more potential downside because we're not going to get more money printing. We could potentially see tech stocks bleed further in a slow way, which doesn't necessarily signal the best. But if volatility all of a sudden spikes up, we actually could see BTC move up as well since it moves with volatility. So it doesn't feel like we are going to go all the way down to zero because that would take some substantial bleeding out of tech at the same time as volatility actually bleeding out and no money printing, which of course we have, which would be really quite odd to see tech stocks continue to plummet without volatility skyrocketing to somewhat buffer Bitcoin a bit. Anyway, long story short, based on this proxy chart, it would take a lot more pain in markets to actually see Bitcoin really go to zero. Now, could Bitcoin go down to $5,000, let's say, and cause substantial more pain for USDC and stablecoins and other brokerages? Absolutely. In fact, pain for brokerages is exactly probably where you have your most exposure. In fact, take a look at this. This was a video posted and filmed back in March of 2021. Look at this video from March of 2021 called The Complete Collapse of Cryptocurrencies, the Stablecoin Disaster. Just listen to about these 10 seconds here and which company, which I kind of nickname in a very similar way, I suggest might go bankrupt.
Over and over again, we have no idea. Let's say Voyager goes bankrupt. Okay, Voyager goes bankrupt because they're like, wow, we just had all these margin losses. Well, CryptoFi is probably gonna have some issues as well.
CryptoFi, of course, being a reference to BlockFi. And that was posted a year and 2 months ago. And folks, just the day before Voyager Digital suspended withdrawals on June 23rd, Voyager suspended withdrawals. Take a look at what we talked about in the course member live stream. On the June 22nd course member live stream, individuals asked me, hey, what do you think about Voyager? And what did I say?
But, customers about 5.48. Yeah, look at that. They're not, they have no money. They're out of money.
They're out of money. This is based on their March financials. We knew in March, well, after the 3AC issue, that the exposure Voyager Digital had on their balance sheet was very sensitive to even a nominal loss. And that 3AC bankruptcy, that hedge fund that filed bankruptcy that once had $18 billion in assets under management, basically tanked Voyager Digital. And so we said that the day before they suspended withdrawals. Well, folks, despite getting a $485 million bailout from Sam Bankman-Fried, who's deemed to be the J-Pow of cryptocurrencies, Voyager Digital has filed for bankruptcy. They were out of money in March after the 3AC disaster that came thereafter. We already knew they were tight in March. We saw 3AC, that was the icing on the cake. And now we saw crypto prices collapse even more. And the numbers we saw on these balance sheets have collapsed. Now they only have $1.3 billion in crypto assets for their customers, $350 million of cash held on behalf of individuals' accounts, and of course they're owed $650 million from 3AC. Here you can see tweets from the CEO who's actually been on the channel to discuss Voyager Digital a year ago. And one of the biggest things I hit him on was, how do we know that there isn't a massive risk with your lending? And he says, oh, but don't worry, we lend to institutions that are very savvy. That ended up being 3AC, which was a complete and utter disaster, but oh well. Here, the CEO of Voyager Digital says, today we begin the voluntary financial restructuring process to protect assets on the platform, maximize value for all stakeholders, especially customers. They say they're actively pursuing remedies from 3AC, but you know what they say, you can't take blood from a turnip. And customers with crypto in their account will receive in exchange a combination of the crypto they had in their account, proceeds from 3AC, which are going to be zero, and common shares in a newly reorganized Voyager company and new Voyager tokens. Well, new Voyager tokens are going to be worthless. 3AC proceeds are going to be worthless. And I don't know how many people are going to trust the new Voyager Digital, so probably worthless as well. So in other words, you're maybe going to get some of your crypto back. And see here, you can see some of the responses on Twitter. You can maximize stakeholder value by giving me my effing crypto back. Can't really blame that at all. It's also worth noting though, and I thought this was a very interesting note, it's important to note that as part of this announcement, we are confirming that customers with dollars in their accounts, not stable coins, dollars, will receive access to those funds after a reconciliation and fraud prevention process is completed with their banks. Wow, folks. Wow, 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 wow. That is absolutely wild. So, is it likely that BTC could go down more? Well, you have the recipe. If we end up seeing gold go up, volatility stay low, and tech continue to go down, BTC could go down as well, causing more havoc in the crypto lending sector. But it's the crypto lending sector that's first to go to zero, And we just saw that process start with Terra Luna, 3AC, Voyager Digital, BlockFi's on the chopping block, and we're probably going to see a lot more companies with issues. Folks, good luck out there, but if you've got money on an exchange, personally, I would make a choice. I would either take the money off the exchange, get out of Coinbase, get out of everything, or, and you could do that by selling your coins, or if you want to hodl, get your keys. That is, get your coins off exchange, put them in cold storage, forget that you have them, sock them away, and protect yourself. Get your keys, not your crypto. And that's why if you gave them your keys to your stable coins or your crypto, it's a big dirty lesson that they can lose it. It's very frustrating. Good luck out there, and we'll see you in the next one.